Hey everybody, it is Wednesday, the 10th of October 2018, and we had a little bit of a bloodbath here today. The S&P 500 lost 3%, NASDAQ down 4%, and no end in sight to the selling here at the end of the day. We have a rule of being defensive with a declining 5-day moving average for reasons like this. When we have the declining 5-day moving average, I've said it several times this week, we don't trust the bounce attempts. We look at them as guilty till proven innocent. You're not looking for a sell-off like this, but you can't rule it out, obviously. The daily time frame, we sliced through all of the important levels here that we've previously laid out, and now we've got to look at that 200-day moving average on the S&P 500. Currently, that is at about 276 and a half, and clearly within reasonable distance to think that if we get further pressure in the morning, that's a possibility to see it down there. Then we have the year-to-date volume-weighted average price for the S&P 500 down just below that. So there's no way to know exactly where the market's going to stop. That's why we look at things and say, here's a potential level to look for support. But when it's at that level, 284, we look at a shorter term time frame and say, is there any evidence that the buyers are actually gaining control? And there was not. You could say, well, it consolidated there, but consolidations tend to resolve in the direction of the bigger time frame trend, which of course in this case is lower. Here's today's volume weighted average price. We didn't spend any time above that today, telling us that there was pressure throughout the entire session. And that it really got more aggressive into the closes. Probably some people were taken out in body bags from this market. The Nasdaq was down $8, $7.90. That brings their monthly loss to 7.5%, which is a big loss here, considering we're just 8 days into the trading session. Into the trading month rather. We have lost almost 1% a day when you look at it that way. So for the daily time frame, what are our key levels? We came right down to the 200-day moving average. That's a potential level that it could bounce from. We also have the year-to-date volume-weighted average price down at about 170 and a half. So if we see further pressure tomorrow morning on the open, another 1% lower certainly seems realistic that we could come down to test that year-to-date volume-weighted average price. There was absolutely no evidence in here either that buyers were gaining control at any point during the day. We got up to the declining volume weighted average price for the day, and the market, got smushed from that level once this little consolidation did in fact fail. We saw, further bleeding. So tomorrow is anyone's guess. My best guess would be that we would, hopefully we would gap down, see a little bit of a flush, maybe then rally up, see a test of that, and then rally hard. Now, a rally hard is not a call for a turnaround. Instead, it's a call that we could see a bounce. And I'm talking about a bounce. That's all we're talking about. We now have a 50-day moving average that is starting to turn lower in here. And of course, the Russell 2000, we've got a declining 50-day moving average. This market found zero support at that 200-day moving average or the year-to-date volume-weighted average price. I pointed those out as potential levels of support. But again, there was absolutely zero evidence that there was, in fact, buyers there to defend that level. The longer term trend line, we're pretty much right on. And you can say, well, why don't you draw the trend line off of this? Because it doesn't really represent the essence of trend. This is what I believe represents the essence of this trend, and that's why we measure it there. So are we going to bounce here? There's nothing here to suggest that. There's the potential, of course, but all throughout the day we saw continued selling pressure. The market stayed below that declining volume weighted average price for the day. And again, there was just zero evidence that buyers are gaining control. We can look at longer term volume weighted average price levels as well. And you can see that even there, I guess off of the late 17 low, that we're coming down towards that level. So that's also at the trend line. Maybe that provides us with a place that this market's going to bounce from. But these are only, as I say over and over again, levels of interest, not places to do business. We decide whether we're going to do business in those places once we see actual evidence from price action that the market is turning. And let's say you did get back involved in the Russell 2000s that got back above VWAP. It doesn't mean you hold it. It means that you then maybe take a look and say, okay, if I think that's the recovery level there around midday, let's draw a volume weighted average price off the low, because at that point, if the buyers are in fact gaining control, they will lose control under here. So had you purchased here, let's say for a day trade, I think your worst case stop should have been here, maybe under the low of the day, but to continue to hold it is just a guessing game, and you're going home tonight in a state of uncertainty. What's going to happen? Nobody knows. The point is we got oversold quickly, but I've seen people saying that this was down too much, it had to bounce, this was down too much, and the 200-day moving average had held after 3 days of testing, but it completely failed today. What does that mean? It means it sucked in a lot of longs in there who spit it out today, weak holders. The semiconductors, as we know, broke down completely. And, these double tops that we talked about have been completely, they've gone well beyond their projected levels, down near about 174 on the Qs and on the semiconductors. We were talking about breaking back, rally up and then breaking down. We saw no such rally up. Instead, it remains guilty till proven innocent. We spoke about the potential. Maybe it gaps up, pulls back, and then finds support. But again, no such scenario took place. Instead, we're looking at a market that continues to bleed off here, and we can look at it and say, well, this is support. We don't know what support is. People said this is support. We know that they are levels of interest. The biotechs have met their objective for the double top here as well, with about an 8 point move. I guess it's not quite there yet. An 8 point move would actually bring it down in this area. But the point is, there was no reason to continue to be long these biotechs, even just looking at a very simple, where did the sellers gain control? This gave us warning as it was below the 5 day moving average. It tested that 5 day moving average when it was declining, and then it fell apart from there. And it continues to show a downtrend. If you want to play guessing games and try to pick the bottom, feel free. It's anyone's, place to try to do that. But we're below the 30 and the 40-week moving average, or which are of course the 150 and 200-day moving average. Financials, as we know, there are we've been talking about this as an avoid. We were stuck at that year-to-date VWAP and 200-day moving average. We do have earnings coming out in this group, but it's very difficult to see that a couple of earnings reports can relieve the pressure that this market is under here. So don't get sucked into gaps higher based on an earnings report or anything like that. But energy pulled back deeply as well. We got stopped out of some nice winners in that group today, and we're still our one open position remains this ANET, which we got short the other day at 255.30. So we've got 1/3 position left in there. Tomorrow, anyone's guess what's going to happen. Things are getting oversold to the downside. It doesn't mean they can't keep going further. For most people, this is a market to just stand on the sidelines.